Stacey, thank you very much for being here. Let's take us through your initial impressions about this exit by Donahoe and the entrance of Hill.
Yeah, good morning, Dom. I think, obviously a change was expected. Last quarter, DTC was down high single digits, and a shakeup was absolutely expected. It's great news that they're bringing back somebody with a 32-year track record at Nike, somebody who's really well liked, somebody who's really in tune with the brand and the business and how to bring back innovation. Obviously, Jean Donahoe was all about digital. But in the process, what happened is they kind of turned their backs on the wholesalers. And that was a mistake. And I think, that would be a process to build those relationships back. And also, even if you look at what's been going on recently, as they've been focusing on a higher margin DTC, last quarter, that business was down high single digits and margins were down. So we need a breath of fresh air. And most important, we need innovation to start competing with all of those competitors that you just mentioned.
So those competitors in the landscape has been competitive for years. I remember the days of Nike versus Reebok and Nike versus Adidas, and those things are still in play right now. What exactly can Nike tap into from some of its prior glory days, right, to translate into what it could look like in the coming quarters and years ahead?
Well, I think it's two things. And, Don, this road is going to be tougher because, as you just said, in the old days, it was like you're competing against Adidas and you're kind of like battling for market share. But now, not only has Adidas upped its game in a significant way, by the way, their business was up double digits last quarter versus Nike's down high singles, and their margins were up. You've got all these new guys that have gained shelf space. But I think the opportunity is what the other guys have done so well is really blur sport and lifestyle. And I think Nike, self-admittedly, really didn't do a great job there. So it's really about building that pipeline back up and also building those relationships again with wholesale to be front and center. They have really had a struggle with the newer, shinier brands on the block, and they have to win that back.
Okay, you mentioned the wholesale side of things. So before we let you go, a lot of the Nike bullishness over the course of the last couple years, and maybe more since the pandemic, has been the DTC or direct-to-consumer growth from Nike, selling stuff directly to customers. But then there's the Foot Lockers and everybody else who sells the stuff on the wholesale basis to retailers, to retail customers. What's the business dynamic have to look like for them? DTC, both, with wholesale?
It has to be both. And I think what has happened is, obviously, most of the brands in a perfect world, you want to sell everything direct and cut out the middleman. It's better margin. The reality is you can't do that. You actually need your wholesalers. And the other thing is that you need to give your wholesalers some of the best and most exciting product. It can't just be the basics, and they can't kind of save all the good stuff for DTC. So I think a little bit of that dynamic needs to change. And also, Dom, as you talked about with Skechers, China is a problem. I mean, China is not pumping their economy as they were before. It's a big part of the business for them. And, I have a lot of companies that are looking at China not coming back for several years at this point. So that is going to be a drag. And that's another set of issues in addition to bringing back innovation.